Hello, my name is Steve Bigelow with the Candlestick Forum. We saw that the uptrend was not in progress, and this was based upon a very simple factor, the T-line rule. As we can see over the past few trading days, we had a hammer signal, a bullish engulfing signal, and then they tried to close it above the T-line, and note what happened in the Dow. They closed it right at the T-line. Now, that alone was telling us that they're still not quite confident yet, number one. And number two, because they did a doji and it actually closed below where it opened, that still told us there wasn't a whole lot of bullish confidence yet. And then the additional factor was stochastics. We're still kind of in a downward direction. So even today, after the Dow traded higher, when it came back through the open, remember what color that candle started to turn. It was now a red candle, and they closed it below the T-line. Using the T-line rule, that tells us our downtrend is still got an extremely high probability of heading lower. Same scenario on the Nasdaq. It was even more relevant that there wasn't a reversal signal last week. It was just bullish trading off the 200. But notice what happened yesterday. They couldn't close it above the T-line. That always should be a very relevant warning, or at least tell you that the prospects of a bullish trade or bullish trend in the market is still not confirmed because they didn't close it above the T-line. Obviously, this downtrending channel is still in progress. Now that makes for strong shorts. This will be kind of a segue. Just we're going to be doing a mini spotlight training on Saturday, the 15th, on identifying the candlestick power trades. Now, it's obvious when you see a sell signal or a buy signal that there's a reversal. But we can enhance our profitability greatly by not only recognizing a sell signal in a downtrending market, but which trends or which sell signals are acting the strongest. The bigger the signal, the more compelling you're in a downtrend. And this is, again, why we use candlestick analysis, visual observations. Notice the doji failed right smack dab at the 50. Stochastics in the overbought area. The doji rule, when it opened lower the next day, told us we were long. We should be out of the trade. And then as it started selling off, it becomes a very obvious short because it's telling us they're not going up through the 50-day moving average. Again, this is not rocket science. This is merely identifying the signals and what the results of those signals are based upon hundreds of years of candlestick analysis observation by the Japanese race traders, telling us exactly what investor sentiment is doing. Power trades, a bearish left-right combo, and the close below the T-line. That in itself is a strong sell signal. But when they gap down after a candlestick sell signal, that tells you not only are they showing you strong selling force, excuse me, they're telling you they're trying to get out of this with great enthusiasm. So the visual aspects of candlestick analysis is obvious. Chewy failed here in a downtrend, failed here again. You can still be shorting Chewy. Why? Because you can see there's an obvious trend channel. Where's your next target? Down here somewhere to the bottom of the channel. That bearish J-hook pattern tells you, oops, if I was short and I covered my short, now I can re-short because there's still more downside. Anytime you can see candlestick sell signals occurring at places that everybody else is watching, like a resistance level, when it tried to come back up through the 50 and failed, the failure was pretty much evident with a bearish left-right combo, one of your strongest reversal signals, and a close back below the T line and doing it right here after failing at the 50, that gave you high probabilities you were still heading lower. Again, every time you're below the T line, you have to assume the downtrends are in progress. So join us on Saturday. It's scheduled for 1 hour. They usually go for an hour and a half, but everybody's discovered you don't get out for less than 2 hours. We're still in a downtrend. See you in the chat rooms.